You're watching today's video technical update presented by FX Times. It is Thursday, April 29th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. Today, we'll take a look at three pairs that are consolidating. The Euro-Pound is stalling at the support of a large congestion pattern. This comes after an intermediate downswing from the beginning of March this year. The Euro-Dollar is consolidating after a longer decline since December of last year. Finally, the US Dollar-Canadian Dollar is consolidating just above the parity level after an even longer decline since March of 2009. This video is being produced at about 2:20 p.m. Eastern Time ahead of the close of today's US trading session. Here's a look at the Euro-Dollar pair in the daily time frame. We see this decline since December of last year, and this is basically a 1, 2, and we may be this is either the fifth wave or we are still in the fourth wave, completing this consolidation. And fifth wave could be projected from the first wave, 100% projection, for example. And if this is the end of our our fourth wave, then our fifth wave can go down to 1.27, 1.2750 area. However, let's monitor this recent low at the moment and see some short-term or near-term, I should say, consolidation. See if it's complete and if we're ready for a downswing from here. For our time frame, we see that there is a rally attempt today. This rally attempt so far from the last decline, from the last bearish attempt, is 50% retracement. Okay, let's see what else we can anticipate here. If the market continues to rally, and if it fails to hit the 134 level, but your RSI is probably going to be above this previous high here, that would be a negative reversal. And what you can do is you take this and project it to wherever that top is. For example, let's anticipate a 61.8% or 78.6%, somewhere here with this 50 moving average. So if this rally tops off around 1.33, 1.3320 area, 30 area, then we could expect a down move from there. Now, looking at the 1 hour time frame, you see here we are completing. Oh, this is misplaced a little bit. Oh, sorry. Here we go. So if this is a corrective wave, here we have ABC, connector X, and another ABC. And for these, your A, B, and C's, they have to have these three wave structures. You may have to go down the time frame sometimes to observe that. But here we clearly have this A, here we have a B, two wave. C is not complete yet. We have this 1, 2, and this possibly third wave to complete our second three-wave correction. So this is two three-wave corrections connected by X wave. And if it's complete at around 133, 133.10, and we see here in the 4 hour time frame, we're planning for this 1.33 top as well, 1.33, 1.3320. So in that 1 hour time frame, we can see this swing projection. Actually, this swing projection comes from a very, very near-term positive reversal here. You see this higher low, higher low. Oh, I'm sorry. There you go. These two lows are pretty much the same, and here the low is higher. So you would project this swing onto the current low, and your swing goes up to 1.33 or 1.3310. So this is an area to look for topping in the Asian session, or basically look for a rally in the Asian session into the European session, and watch for topping action coming out of the European session into our Friday US session. And if that can break this rising trend line, then we have a downswing towards 1.31 again. Okay, that's it for the euro dollar in the near term. Here's the Canadian dollar pair in the daily time frame with three different projections, and they all come from your negative RSI reversal. However, I'm a little bit suspect on further bearish action, although we haven't hit the 2007, or was it 2008? Let's go back a little bit here. So we're testing the parity level, which here in 2008 you saw we spent almost until August, right? Ranging around this parity level. Okay, so it's a very sticky level, and the market at the moment seems to be ranging between 0.9920 to 1.02. So very narrow range. I believe if the market were to range here for a longer period, that the volatility would be a little higher. It would be a wider range. So with that in mind, with that opinion, by the way, it's just an opinion, I believe that this 0.96 level can be reached. First, we'll have a downswing here to retest 0.9910. Then we'll break it, go to 0.9850 before a little rebound, a little pullback, but ultimately the 0.96 level is viable if this level breaks. If the 0.99 level breaks, we have a pattern breakout projection and this swing projection for the negative reversal signal. Okay, so that's the daily time frame. Let's look at the 4-hour time frame, and we saw some whippy action, even though it's quite a narrow range for the long term. In the short term, it's been a volatile couple of weeks, several weeks. We had Goldman Sachs, we had Bank of Canada being hawkish, and then we had more credit default risks coming out of Europe. So there's some risk aversion. There was some interest rate outlook that sort of whipped this pair right above as it's consolidating around the parity level. Here we have this rally attempt miss our previous high, which is an implication of weakness. So our outlook to 0.9910 is very likely at the moment. So keep watching that. However, if the market bottoms before reaching 0.9910 and your RSI gets lower than these, you should expect another swing, another bullish swing before further decline. So right now the RSI is testing these previous lows, but if it goes down further without your price going also down further than this previous low, then watch for another swing to test the 1.02, 1.0250 high. Alright, let's see, not much to talk about in the 1-hour time frame. We see that here we have acceleration, so confirmation for the 0.9910 in the Asian European session. So that's this target right here. Here we have the euro pound pair, and if you remember, our target at 0.8650 has been reached, and the market is consolidating around that area. The euro pound has been declining for even a longer period. Actually it's been in a congestion pattern instead of just a decline. So you see this triangle kind of pattern. It's not a triangle per se. The wave counts may not fit a Elliott wave type of triangle, but it is a congestion pattern. The market is making higher lows and lower highs in the long term. So here daily we're going to monitor this support level. For our time frame, we see A, B, C, X, A, B, and another C coming up. We probably could see that better in the 1-hour time frame. So this is 1. You see this 3 waves. 1, 2. A, B, C, X, and then A, B, and we are expecting another C wave. So anticipate a rally in the Asian session, European session towards a previous high, maybe a little bit higher at 0.89 0.9 area. You have to know that here we have another power line, so it shouldn't go above that. We should find some resistance there. Okay, so 0.8750 area for this C wave rally. Let me come back real quick for a confirmation here with a positive RSI reversal, suggesting a projection of this swing here. So the more conservative target is at 0.8720, while our full target is at 0.8745, 0.8750. And that's all for today. Check out fxtimes.com for other technical and fundamental analysis as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.